Hello traders, today is the 6th of February 2013. The time in London is 2:54 a.m. In New York 21:54 p.m. This is the Asia session. Okay, we are looking at the US dollar yen currency pair, the dollar yen currency pair on the hourly chart. Okay, I'm going to put here, this is about real time Elliott wave trading. Okay, and I'm going to put a vertical line here. Pay attention carefully here. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW as well as 008 traders. I will put a green vertical line on my chart. You can see here. This is the 31st of January 2013. Okay. All right. 31st, the end of January 2013, and we see that the dollar yen, is starting the February month bullishly. It went up to this level. So, like a child, a little child, I will say that the price moves. Moment please. I'm going to color this line now. Into black. I will say that the price, moved, from here. From the 31st, the price moved to this level here. All right, can you see your chart? Even a little child can see that. So the price moved from here to here. All right, and then the price went down to this level here. This is what a child will say. And then the child will say, the price move up to this level where we are now. So this is what has happened. So the dollar yen currency pair on the hourly charts from the 31st of January 2013, it was in a rising channel up to which day is this? Up to the 4th of February, 2013, and then from the 4th of February 2013, it went down up to the 5th of February 2013. From the 5th of February 2013, it went up to, where we are today. Today is the 6th of, because of the time difference, London is on the 6th of February. New York is still the 5th of February, if you understand the time difference. All right, right here. This is what has happened. Now, this video is about Elliott wave, so this is an up move, and then the price pull back here, and then it move up to this level here. Now we see that we can see that the movement from here to here, this is a correction to this move from here to here. Can I see again? The movement from here, the retracement from here to here is a correction to the bigger uptrend here. This bigger uptrend, this is the first correction. Now look what's happened. There was a correction, and then the price went back again up. The first thing that is coming to our mind is what we call double retracement, double retracement. So the price corrected to the trend, and then the price went back again to where. So we corrected this portion. We take this profit out of our gain in this trend. Now we bring the price up. The price went back again up. This is what we call double retracement. It's a special double retracement because in this case, though the uptrend has ended here, pay attention. After the correction, the price went up again to display a new high where we are now. All right. Very interesting. So after a correction, the price went up again to display a new high. The first thing that is coming to our mind is a flat correction. All right, not a classic flat correction. We are thinking of what? A running flat correction or an expanded flat correction. These two types of flat correction. The B corrective move, which is from here to here, will exceed the starting point of the A corrective move. So, to summarize, this first correction from here down to this level here, that's the A corrective move to the bigger trend. the move from here to here, that's the B corrective move, B for Bravo, corrective move for this bigger trend. We are now expecting, in normal condition, ladies and gentlemen, we will not impose our intention on the market, all right? We are expecting, okay, in orderly manner, okay, the C correction. There are two scenarios, okay. Now we can see that the A correction was not into 5 waves, not very, very strong. If it was very, very strong, we will expect the C correction to take, okay, this low here. But, all right, so we will say to ourselves, the C correction to come at least to this point. Let me highlight that section. At least to this point, somewhere here. So I'm going to call out our expected. Ladies and gentlemen, this is not certainty. This is about forecast. Okay, we are expecting something, and if it's happening, what do? We will take advantage of it. And if it's not happening, what do? We don't do anything. Or what we do, we put a line here, because the reason why people lose, you expect something, you force it on the market, and the market will do something else. You don't want to do that. You want to be very flexible. So I'll put a horizontal line. This is my warning line. So I say below 9378, priority to sell signal. So there is the inverse to that, above 9378, which means not just because it goes above, you just buy, going price should run up fast above 9378, pull back to retest it, okay, and then find a support there and give us a clear-cut buy signal, and then we'll take it up cautiously, because the first thing we were expecting, we want to sell, but we see now it break above it, it retest it, and it's turning around. If we want to buy cautiously. All right. But now, because we are expecting a C correction, we will draw a horizontal line there. If the movement, okay, if the price continue movement above our warning line, we will stop selling. All right. So this is the problem when we are posting video on YouTube. We want traders to understand what we are doing, so they don't go around and just place a trade and make the mistakes. By the time the market opens tomorrow, London opens tomorrow, okay, there are some important news, the ECB, okay, there will be some talk from ECB tomorrow also. The economy news can change the dynamics of the market. There was some data today regarding the pound dollar. You see how it has changed the dynamics of the pound dollar. And the day before, we were expecting to buy the Australian dollar, US dollar currency pair. There was some data from Australia. Did you notice that? Okay. Late in the night yesterday, there was some data that has changed the dynamics of the Australian dollar, US dollar currency pair. And it's now going down big time. So this is what we are talking about. The technical, combining the technical with the fundamental, paying attention to the economy news, so that we can make consistent winning, we can achieve consistent winning trade, okay? So we will expect to roll it down. Now, we know also that, okay, the Japanese government is busy selling the yen. So this currency pair, if the Japanese government continue to sell the yen, it will go up more, okay? But if they pause a bit and they allow the market to play as the market is supposed to play it, in normal conditions, we should see the price coming down to this level. We will see. But our warning line is here. This allows us to control the risk, so we do not get into trouble. Very important. For the flat correction, what usually takes place, the theory, the flat correction will take place after a strong up move or a strong down move. And the A correction will bring the price down into the zone of 50% and 61.8. Retracement level, you can see that the 50% level, that's exactly where the price, okay, the A correction ended. You see, I'll call out the 50% level for you into red. So the A correction will bring the price, we corrected the bigger move, the strong uptrend or the strong downtrend into the zone of 50%, 61.8. Here you see stop on it, okay? Using the Fibonacci extensions, because the price pulled back to 50%, our target is 127 or 138. So we will expect the B correction if he exceeded the A correction, because you need to understand that if the A correction is divided into 5 subwave, which means very strong move to the downside from the A, the B correction will fail to exceed the starting point of the A. Now, by the way, there will be a new page posted at www.24elliottwave.com, and I will be posting more than 6 videos on that page explaining to traders what is a flat correction, what is a running flat correction, what is an expanded flat correction, what is a classic flat correction, how one can trade a flat correction, the preparation for a flat correction tips, and more. This is about understanding, okay, the flat correction and trading it like a practical, okay, trading strategy using the flat correction. All right, so this is just a quick information for traders. So now 50%, we're expected to go to the 127 or 138% Fibonacci retracement level. Very often we will see the price going into the 138% zone, okay, which means the price will violate 127 and go to 138. But here, right now, we are at 127. Okay, we will see whether the 127 will hold it or not. If you fail to hold it, the next target is 138. Using my drawing tools here, because the price move up, I will do the inverse drawing like this. Okay, I don't want to move this one. Okay, this is my Fibonacci extension. You can see that this is my 127 level. That's where we are now. The 138 is above it. I will draw that one also there. As a day trader, whenever you want to buy or sell, you must draw a warning line. Okay, a warning line. This will allow you to control the risk. So now the blue line is my first warning line. So now I know that I'm expecting the price to give me a sell signal here. If it goes above my blue line and it's displaying higher lows, I'll know that, okay, I'm not going to sell anymore. I'll let it go. All right, that's how you do. So you don't keep selling it when it's going up. All right, okay, you see now. But all we have done so far, we have done a technical analysis, okay, using the Elliott wave pattern. This is a flat correction pattern on this hourly chart from the 31st to the 6th of February. This is what the dollar has done. The dollar move up and then pull back to 50%. Trader used Fibonacci extension. They are watching this zone. These are target zone. If you receive okay, a valid sell signal here, that will be a convergent signal. All right. This is for day trading. So as a TSCW trader or TSCW trader, if I understand, okay, clearly the flat correction, I know that the flat correction will take place after a strong up move or a strong down move. So there was a strong move. You can see those top candle here. It's quite strong. You see, it's very strong. Okay. So when we see a strong move like this, there's a high chance that we may see a flat correction. The A correction will bring the price into the zone of 50%, 61.8. The B, if the A correction is very strong, which means divided into 5 waves, very strong down, the B will fail to exceed the starting point of the A correction. If the A correction is just a weak move like this one, not very strong, there's a high chance that okay, the B correction will exceed the starting point of A, which brings us to the target zone 127 and 138% using the Fibonacci extensions. The C corrections, okay, if the B, pay attention carefully, okay, can stop, okay, the C correction is usually 5 waves very often, but I don't like to say always. Some traders say always. I don't like to use those kind of words when we are trading. It's like I say guarantee, always. I don't like to use those kind of words. All right, it's usually very often, more than 80% of the time, will be divided into 5 subwaves to the downside. In the case of a running flat correction, the C correction will fail to go below the end of the A correction. But in the case of the expanded flat correction, the C corrective wave will go below okay, will violate the end of the A correction, which means we'll be divided into 5 ways, bringing it down. Even sometimes you will see it will bring it down all the way to the starting point of the bigger trend sometime. So we'll expect it to take this low here, okay, in the case of expanded, okay, a flat correction. All right, but now we don't assume anything, but all we are saying is that there's a high chance the price may come to this level, provided that it stay below the 93, okay, call it 9380 level, this blue, our warning line. This line we allow her to avoid making stupid mistake, which we sell and we just keep selling while the price is playing higher low above our warning line. Let's go now to my favorite 3-minute chart. Okay, you see my drawing from the hourly chart. This is all my drawing for the hourly chart. So you understand now, okay? You understand clearly, okay? So this is a live, okay, real-time Elliott wave trading using the flat correction. I'm going to remove all my lines on this 3-minute chart so we can see I'll put only one line, my warning line. So I'm going to just put it there, roughly there. All right, this is my warning line, so I leave it there on my 3-minute chart. Okay, so now this is my, because I always in the past I trade on this time frame, so I'm just going to start drawing lines on this 3-minute chart to see what the price is communicating to me. There is a kind of triangle here. Can you see on this 3-minute chart? Let's make it very gorgeous. All right, you see the triangle now? Blue would be nice. Okay, that's it. You see now? So my warning line, in fact, I will change the color to red now so you can differentiate. That's it. That's my warning line, okay? So priority to sell signal below 9380. That's it. All right. So this is my, so the price now in a triangle, if it come out, okay? So I may give it a chance, sell it, place my stop loss above this level. Okay? It's not too bad, isn't it? All right? At least I'm not gambling. All right? So I'm taking okay, a calculated. But if the price break above and it's displaying higher low, what do we do? Okay, we will. You see, because you can see that this is what some trader call pole. Okay, the price went up to this level. Okay, and then you see this triangle here. Okay, in fact, how we do it instead of, okay, this move. You see, it went up from here to this level, and then we have the triangle. You see now, if it come out here and displaying higher lows are high, our target will move this to the top here. I can't move it now. Okay, I can. I learned few things about this software. I can, you see, I can. All right. So I'll move my target and put on top here. All right. Excellent tools, TC2000. All right. So my target will be here. If it finds support above my triangle, displaying high lows, which means we have a new, okay, rising channel, my target will be here. Using the, you see, the first move up before the triangle. If you break above it, I will just project it here. That will be my greedy target. All right. Now there is a talk also, as we are talking about USD yen, that the Japanese government want to devalue the yen to the point that we have, okay, $1. Okay, for 100 yen. So the market is pushing this currency pair towards the 100 level. That remains to be seen. In my view, I think the yen should give a healthy pullback to give us the second wave on the weekly chart. Though a lot of traders think that this is the third Elliott wave that has begun, I disagree at this point. I may be wrong, but I disagree. Talking about day trading using the flat correction, live Elliott wave, real-time Elliott wave, flat correction. This is what we are doing now. So we have seen the pattern now on the hourly chart. So now we must trade it. So we are waiting for signal. Okay, you see now, So one scenario is, for instance, price coming below this level, okay, and I may decide to take, okay, no-brainer trade, placing my stop loss above here. That's not stupid. That's not too bad. Another scenario, I can wait patiently and draw, you see, because there was this point and this point draw a kind of channel here, which I'm going to color now. No, green will be nice. Okay, see this point and this point. You see it's touching here. Some traders are giving it a chance, so the price may form a kind of a declining channel, something like this, and I may decide to take. Okay, if I don't take it here like this, okay, so because it's still in a triangle, it's a bit tricky now. You see, it's still in a triangle. Can you see? It's still in a triangle, so I may allow it to come out of the triangle and then come back and retest the edge of the triangle. But I may decide now, as soon as it comes out of the triangle, to sell it and place my stop loss here. That's not stupid either, okay? Or I may allow the price to come out of the triangle and to give me the first lower high. Alright? Okay? But so far, is still, okay, in a triangle. As I explained to you already, we have seen the pattern on the hourly chart, but we will not force our expectation on the price. The price can violate my warning line and then display higher lows, which means we will be in an uptrend. Alright? The second scenario is that the price will comply to my expectation, and when I see that, I will take advantage of it. You see now? Which means I will be salivating, thinking that the price will come down all the way somewhere here, giving me, okay, alright, more than 100 pips. Alright? I hope you have enjoyed this video about live flat correction trading that you will put into use, okay, to make excellent trading decision. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS 008 traders. Speak to you soon.